So we move on to our first technical session for today. So for the first technical session, I'll first like to invite CA Renu Modi ji also on the dais, uh, who's also a member of our ACI study circle. And now I would also like to request CA V Raghuraman sir, senior advocate, to please grace the dais. Sir, no problem. Please, sir. To introduce Sir, Senior Advocate V. Raghuman Sir was designated as a Senior Advocate by the Karnataka High Court in December 21, one of the 5 only chartered accountants to receive this honor in that year. Based in Bengaluru, he is noted for his commanding presence in courtrooms and professional forums. With dual qualifications as CA and advocate, he specializes in GST and indirect taxes and administrative law. Though sir has given a very short introduction of his, to be honest, because he is quite modest. I believe he's one of the best advocates known around the country, and we see his names being published in best of the judgments, and most of the judgments which we are seeing in the ones which have been published, a lot of judgments you would see his name as well. So he is a very avid reader, and he's a person who's always very insightful with his deliberations. So this is one of the reasons why we thought that, I mean, we'll be extremely enriched if we have Sir grace the occasion for us. So thank you so much, sir, for joining us today. And now I'd like to request CA Mohit to please present a memento to V. Raghuraman, sir. And Uttariya from ACI as well. So the first topic that we have for our discussion today is on emerging jurisprudence in supply and valuation. Perhaps one of those areas where one of the revenue collections would be, I'm sure, one of the highest. GST, as we know, is a culmination of classification and valuation. So valuation is one chapter which directly has a very significant impact on the business revenue of a person and the taxes that they are supposed to discharge to the government. And whether a transaction is to be considered as a supply or not may have a transformative effect if the ruling is different from what the person had been following till date. So the areas which are perhaps an area of concern from this perspective, which includes the exemption, the valuation, all those areas require a lot of attention from a very minute perspective, and we should be looking at our clients, because at times we tend to get the data from the clients for filing of returns, and we simply file the returns based on the taxes charged. We tend not to look at the granular aspects of whether it invites taxability in the first place, or if they are not taxing it in the right manner, perhaps we are ignoring the issues of pure valuation, pure agent. In case of valuation, we are tending to only charge on the agency charges without taxing the reimbursement part. So all of those areas where we feel the valuation plays a very important role, we'll be very happy to listen to sir on those areas. So sir, I request you to please grace the dais and start with your deliberation. Thank you.
It's a matter of great pleasure and pride to be back in Calcutta. Thanks to Arunji, who has told me to come. We had a very frank commissioner, or I think officer of the department, who was quite frankly telling the problems that they face. without blaming the people who create it. I'm not even talking of the officers here. The fake invoicing doesn't happen because you want it or I want it. Somebody wants it. Therefore, tax, what people should realize is neither the chartered accountants nor the advocates are interested in defying the law. They are not. They are only developing the law. If your law is deficient in some way, we are only bringing it forth and saying this is where it is deficient. That is our role. Every morning you get up and see the mirror. I have stopped seeing because I don't want to see my face nowadays. That's what, as you go older, you may think, oh my God. That way, the legislation should grow. Not in a way that the legislation will regret being there. So our role is only to hold the mirror to the government and say, this is what your legislation is, this is what if you want to tax this, do this. Since you can't do this, no tax. This is all our role is, nothing else. The emerging jurisprudence, which is there, in fact in GST, it will keep emerging for the next 20 years. Every time we'll speak, I am very sure ACAE will not call me in 20 years' time because I'll be too old for this. But if the misfortune does happen, it will still be emerging. Because fundamental concepts, you see, always is a tug of war between the government and the assessee. I'm very, personally I'm very happy that one of probably my best arguments that I would have probably done found recognition of the Bombay High Court in the Goa University case, which carried on for close to 4 days, I think. You argue only as well as the judge allows you to do so, the bench allows you to do so. That bench was so good. They were very nice to us. They heard everyone in detail. But the implications of that, you see, what happens is I was surprised to find that it doesn't come in that 51 business published. So I said, maybe I have not argued well enough. And I was also surprised to find the head notes that come in all these websites, Affiliation fee not subject to tax. That was not the implication of the judgment. The judgment was not for just affiliation fee. The judgment was argued so that it will take out a large sector of people who are not in business from GST. That was the intent behind those arguments. Goa University was nimit, as they say in Sanskrit, nimit. I am also nimit only. Passing cloud. So if you look at it, what is the judgment? What were the principles laid down in that judgment? And that is fundamental. There has to be a business for you to bring a tax. There are only 2 things which I argued in detail. If you want to tax a supply, 2 conditions have to be satisfied. In general, under section 7. There are exceptions. In general, if you want to bring it to tax, there are 2. broad conditions. Supply should be for consideration. Supply should be the course of furtherance of business. You have to show these two things. Government has to show these two buckets and fill it. There should be consideration and it should be in the course of furtherance of business. If these two conditions are not met, even if one of these conditions are not met, there is no GST at all. Levy is not there. If you look at the European VAT law, it talks of economic activities as contrasted to in the course of furtherance of business. There's not much contrast. There is some differences there. Some differences there. The implications of that judgment in Goa University will be that if regulatory activities are undertaken by a government appointed institutions for a fee, it is not equivalent to consideration under a contract. This is the argument which I have put before the Honorable High Court. Consideration for contract is different from regulatory activity for a fee. One is bargained and arrived at. Another is specified and got under a statute. That's all. If it doesn't fit in the terminology of consideration, there is no tax. Second, is it in the course of furtherance of business? For that, we had to rely on several decisions. What is business? And what could be said to be business? And whether, if you look at the university legislations across the country, can you say that universities are are carrying on a business? On both these counts, we got a favorable order from the Bombay High Court. And if you see the EIRC decision of the Delhi High Court has now been affirmed with the Supreme Court on more or less analogous principles. Not such a detailed discussion as the Bombay High Court has done, but I am saying there is also another principle which all the head notes wala missed. Head notes wala missed one very important principle. If your main activity is not business, incidental activities cannot be brought to tax. That is the most important principle in Goa University's case. If you look at the celebrated decision of Supreme Court in Sai Publication Funds case 126 STC, what does it say? If you have activity incidental to business, it can be taxed. But if you have an activity incidental to charity, it cannot be taxed. So if you're carrying on revenue generating, what is the Sai Publication Fund case? I have said this in Calcutta itself so many years back. But when I said that time, there were no case laws in GST regime. Now we have. A trust which sells books on Sai Baba. Now, tax authorities want to tax that sale of books, saying it is business. What did the Supreme Court say? Said the main activity of the trust is charitable. Therefore, incidental to charity cannot be brought to tax. Simple principle. And that is what in Goa University you find a beautiful discussion on that. So trusts which, for example, I'll give you an example. There is let us say there is a trust. Trust for religious purposes or for any purposes, which is covered under section 11 of the Income Tax Act, or 1023, whatever serial number is there of the Income Tax Act. Let us say trust has a commercial complex which it lets out for rent. Incidentally, this decision will help the trust. The principles laid down in this decision, you will have to see if it applies to the trust. It will help it. It is these kind of, it is not the decision itself, but the ratio of the decision which is going to help you. Help those who are not into business at all. You are an individual, retired person, you have a piece of land which you develop, a JDA, whatever you enter into. You are not in doing any business. I have failed to understand how they can bring landlords to tax. I have completely failed to understand. Landlords are not doing it in the course of business at all. It is simply they have one piece of land which they want to, give away for the purpose of ensuring that their rest of their life can be met by this income. That's all. So JDAs which purport to tax individuals who part with their land, I find it difficult to understand how the department can bring it to tax in the first place. And this argument has to be taken across the country. See, it's not that only I can take all the arguments and succeed. There are so many other people who can do it also. And who should do it also. Whoever gets the first judgment will benefit the entire country. Whether it is me, whether it is Avinash ji or anybody or Shubham, whoever it is. It will help. How to read an exemption notification? Rather funny that if you go and tell any student, you forget yourself, you are all experts in GST. You go and tell your son or daughter, university is not an educational institution, he will laugh at you. But we had to hear it in the courts. Senior departmental representatives telling us, university is not educational institution. I can't believe this, I say. I had to spend half an hour on why university is an educational institution. And I found it, of course, I found it funny. But I had to tell them, you see the exemption notification. It says education institution means any institution which imparts. It doesn't say college to student. 1. 2. You are a student of the university, not of the college. And that is recorded by the Bombay High Court. My submission which I made, I said, primarily we are students of a university, not of the college. So please study that judgment in little more detail, and you may get some more ideas which I am not getting, and implement it, because that will be more helpful. There is another set of decisions. This ongoing debate is there. So I wanted to settle this debate once and for all. I was waiting for opportunity, because there is a section of people who say real estate transactions fall within this transfer of real estate. Those transactions fall within the definition of service. And for long, I have been speaking saying that it doesn't come. There's a difference between transfer of rights in real estate and exploitation of the real estate for income. These two are different. I was waiting for an opportunity, how we could get this opportunity to, see, we can't go and ask for cases. It has to come. Till that time, you have to patiently wait. And that too, when you're designated seniors. Unless somebody entrusts the case to you, you are not in the picture, you are not wanted. Two such cases came, both in Karnataka High Court. Detailed judgments. One was the Solatium case of Asha R, and another is the Rohan Corporation. These two cases. I believe it is not there in that compilation. Probably it's not that important, but I'll mention what it is. We are more worried in bringing out books than in seeing what is there in the book. $100 important cases, 1,000 important cases, 500 important cases, 50, 25, 1, 3. I'm not belittling the effort. It's a fantastic effort. I'm saying bestow little more attention to the principles that go there. There's no point in discussing cases of cancellation of registration. These principles of natural justice. All this we have seen, every 90% of the cases are that. It's a bore. No principle comes out of it other. The first case, if you have done, 100,000 other cases are the same. Please take up some issues and try to see if you can get into those issues. That will be, you are a very big organization, you should do that. So you look at immovable property transactions, Solatium. Obnoxious case, if you ask me. You want to tax Solatium. You want to tax compensation received by a person who gives up his land. You look at it, see this idiocy, and this I mentioned in the court openly. One of the grounds I took, I told them, let us take an example where I sell the land to a third party voluntarily. I may get 5 crores for this land. I sell it. You say it is not taxable because it's there in Schedule 3. Now, government decides to acquire my land and gives me 3 crores. You will tax it? I lose 2 crores. On top of it, I have to pay GST. I gave this example to the court. I can't imagine what this argument is. And what is the difference between acquisition of immovable property and the transfer of immovable property sale? Nothing. That is why I argued in that case, in both those cases, which I don't remember. It is recorded in one of them, that the entry of Schedule 3 is ex abundanti cautela. I only told the judge this. You remove that entry, can you still tax transfer of sale of land? You can't. You remove entry 5, which is 5, no? Entry 5 of Schedule 3, you remove it. Can you tax sale of land? You can't. So that entry becomes ex abundanti cautela. So you should not only take out sale transactions, acquisition transactions, where rights are transferred, everything should be taken out. That is the principle. That is why in Gujarat you have this series of decisions where they say, assignment of lease cannot come to tax. In fact, they should have stretched that principle to the original allotment itself. That they have not done yet. So we produced the GST Council minutes to show how they have a discussion that they want to bring real estate transactions within GST, but then they say, no, we can't do it. There has to be agreement, and then they give it to ministers, group of ministers for discussion, etc. To show that transfer of property, immovable property, was not in the contemplation of the GST law at all. That is the reason why the Solatium case was very important. Then we had the similar challenge. Partially completed building, you see the facts of that case in Rohan Corporation. A building is partially complete. Company goes into liquidation. Company wants to sell that building. The liquidator wants to sell the building. Petitioner approaches that liquidator to buy. Liquidator says, you can take it, but you have to pay GST. This man says, why is GST payable? Liquidator says, I don't know about it. You pay, then you take the building. So he pays it under protest, takes possession of the building, files a refund claim. 14 crores. Department, you know what they will do with it. We are all under this. Whether you keep the photo of goddess Kali or any other goddess or god, please keep photo of commissioners with you. Assistant commissioner, deputy commissioner, superintendent, all these are the gods. If these gods are not there, what will we dogs do? Reject, refund. So instead of going in appeal, because what will happen in first appeal? He will add insult to injury. Second appeal, we don't know. There is supposed to be a GST which is coming. We don't know when it is coming. It is like that ubiquitous tiger which has to come, which never comes. And when it comes, nobody is interested. Straight away we filed a writ petition. And department said, no, this is a partially completed building will come under entry 5B of Schedule 2. They say, partially completed building will come under 5B because it has to be completed. Incomplete building, you have to complete it. And therefore, it will fall under construction services and should be taxed. This is the argument of the department. So we countered it by saying, look, when the liquidator sends the building to me, there is no contract for construction services. Liquidator is not doing any construction services. Liquidator doesn't do any works contract services. He is selling as is where is basis. He gets rid. He wants to wash his hands off. So therefore, even a partially completed building when sold as such will come as a sale of immovable property. So we relied on a paragraph in VKC Footsteps where they say stamp duty transactions were meant to be kept out of GST. And the court agreed with us, saying sale of immovable property cannot be bought to this. It's very important for us to note that these fundamental principles will have to be carefully looked at, analyzed and followed. If we don't do that, these fundamentals, you'll have more fundamentals coming in over a period of time. Because when we look at this, if we don't challenge these fundamental principles, you will not develop the law. Or the law will develop in another side, which will be detrimental to a large population which does not do business. And you imagine immovable property transactions are already costly, subjected to 6-7% stamp duty, subjected to further GST. How much will you pay? This is the implications of these three judgments broadly. When it comes to supply again, you had the IMA decision. I'm happy that I remember having been a part of a larger team which we all argued, about 10, 11 of us argued the Calcutta Club's case in the Supreme Court. When we argued this case in 2019, I remember it started Tuesday 10:45 a.m. before a 3-bench and went on till Thursday 4 o'clock. 3 continuous days. Justice Rohinton Nariman said, we have started, we will continue, no stop. 3 days. We learnt a lot actually, more than him learning from us, we learnt from him. Because if you quote one decision, he will tell 10. If you quote the judge's name, he will tell who his father was. Amazing. Amazing personality. So when we argued the Calcutta Club's case, we only said this, that constitutionally, when you want to tax a transaction, it should be between 2 people. I'm saying constitutionally. That is the basis for the IMA decision. What is the ratio of IMA decision? It is simply this. You brought in an amendment of 71A and the other definitions to get over Calcutta Club's case, where Calcutta Club said club and members are not different, you should have 2 people, there's only 1. And therefore you can't bring it to tax. So they wanted to get over this. So you get over it by inserting 71A into the CGST Act and then fixing explanations, etc. And what does the Kerala High Court say? Only this. You can get over a constitutional amendment and a Supreme Court decision by further constitutional amendments, not by amending a statute. This is all that decision is. Simple. You want to overcome any Supreme Court decision on a constitutional matter, amend the Constitution. Don't come to the statute and amend it. The other important issue there is, between a principal and agent, you can only tax the transactions between a principal and agent. If a principal supplies to agent and agent supplies to principal, you can tax it. If the agent acquires something on behalf of the principal, you can't tax it. Your associations which do maintenance, for example, I'll give you associations which do maintenance of the common area. You're all fighting over the 7,500 exemption, whether it goes above, entire thing is to be taxed, or only above 7,500 is to be taxed, all this. But I am on a more fundamental thing. I am saying the agent gets this for the principal. It is no supply between principal and agent. That is not there. It is simply an agent-principal arrangement. So as to say procuring, what they say, procuring services. So therefore, transactions of that nature can't be brought to tax. What is not taxable cannot be brought to the valuation mechanism. So the IMA decision is a landmark. There is no doubt on that. May go to Supreme Court. Many of these decisions go to Supreme Court. All of this may go. We don't know. The fact of the matter is that it is a landmark. How much time do I have, sir? Please tell me, cut me short if I am going beyond. Have I exceeded my time? No. Mother 5 minutes. Yeah, I always ask this because I don't want to step into the shoes of the other speakers who will be waiting eagerly to speak and move on like me. I haven't even touched valuation because I don't know if I can do that, but I'll just tell 1 or 2, 3 issues emerging jurisprudence. Issue number 1 is, as the commissioner was rightly saying, valuation is a big issue which has to be sorted out. Hardly we have cases on valuation happening. That's because that mechanism department is yet to get into. That will happen only if you start adjudicating cases. Today we are more worried about fake invoice, ITC, benefit, that fellow not paid, you deny, all this kind of things. Take out some statement. You see, if you want to kill the UPI, do what you are doing in Karnataka. And see, in any tax administration, you should have the cost of administration and the revenue should be compared, cost benefit. 90% of those transactions are with fruit vendor, flower vendor, and you want them as all are exempt. You're not going to get any single revenue from them. You want them to go and consult a chartered accountant and take advice. And if the chartered accountant tells the the flower vendor, you have to reconcile your books of accounts with 26 AS. What are you? I can't follow this line of thinking at all. You're wasting everybody's time, including yours. And see, I don't mind wasting my time. But if the officer wastes his time, please understand, I as a taxpayer pay for it. His salary is paid by me. Don't waste your time in these ventures. So in valuation, if you look at it, some issues which we are fighting in the High Court is whether notional values can be brought to tax. Now this is slowly starting, where the department will say, saying that we should impute a value to the supply. Imputing values to a supply and trying to bring it to tax. Whether notional values can be taxed. I did get a stay in one of the matters in Karnataka High Court some time back. Corporate guarantee, for example, which I think I argued long back. To say that Rule 28A, is it, which was inserted. Guarantee given by a holding company to subsidiaries for whose benefit? Mutual benefit. Mutual benefit. Ultimately, the entire structure benefits. See, I'll give you an example. Let us say I have to implement a power project in Calcutta, in West Bengal. Government will say you set up a subsidiary here, I set it up, no problem, to implement this. Subsidiary goes to the State Bank of India or any bank and asks for loan, that man will say, take a walk. You don't have anything, there's no balance sheet, nothing is there. This is your first year. Operation, you have some minimum capital. All I can produce is memorandum and articles of association. So the holding company which ultimately wants to do this business will have to give the guarantee. So for whose benefit it is? Predominantly for the holding company and also for the subsidiary. There is no service element in this. This is what I had told the court. There is no service element. It is what is called shareholder interest. Concept of shareholder interest. Transfer pricing regulations may be there could be some implications. That is different. But when it comes to the GST law, it is the shareholding interest which is. And shareholding interests, to the best of my knowledge, are not subjected to tax. And cannot be subjected to tax if it is for a mutual benefit. You take the decision in central excise, as the commissioner was mentioning, about central excise which we may not know at all. In central excise law, Philips India's case is there. Several other cases which followed, which says if you share expenses for a mutual benefit, that is, a TV manufacturer advertises his product. Part of the cost is recovered from the distributors because they also benefit. Now, the excise authorities wanted to add that cost into the assessable value of the TV. The Supreme Court said no. It is for mutual benefit. It is not something which is recovered as a part of the sale price. No, it is this concept in excise which is there, which is going to help you in all these cases. Apart from taxability as one of the measures, valuation. When it comes to valuation, what is done for my own benefit cannot be taxed in my hands. Simple principle. So with this, I think some of the issues in this 1 hour I have been able to cover. I don't want to step into the shoes of the other speakers. So I thank you for the opportunity. Thank you very much.
Thank you so much for your wonderful and insightful session, sir. I think I went back to my student days when we were studying all the case laws and we had to understand the principles. And as Avinash sir also mentioned, we are all students of law. And I perhaps felt like one when I was on the stage today. So I intentionally left some time for the Q&A because I'm sure we all have a lot of questions in GST. All of us here are practitioners or students of the subject. So this is one opportunity where we can take a lot of time in trying to ask as many questions as possible, obviously within the limited time frame that we have. So I mean, sir has been quite modest, but when you talk about the rulings which has evolved over a period of time. You can refer to the books which have been published. I think this is the only book which I know which talks about international VAT judgments, European Court of Justice judgments, and how it influences the GST law. All of those principles have been written by Sir in his book. I don't think I have seen any book in the whole of India which is borrowing these principles of the international jurisprudence into the GST framework. So this is one, I think this book is something which I have personally been able to use directly in some of my cases. So I personally feel that this is something that we can all learn from. And yeah, so yeah.
To interrupt him, I find his presentations very good. I see his presentations always. So I admire the way he presents the provisions, especially striking out the old provisions, putting in the new provisions. Very well bought out, PPTs which he does. Very useful for us. Actually, personally, it's very useful for me. Because anytime I have to see, what is a provision, how it has moved, I have to only refer to his PPT. He'd have struck it out and then put the new one. Very useful. So we are also students of the law. We are also in the same learning boat as you only. Nothing different. We can say under this, I am not being modest. I am being truthful.
Extremely kind of you to say that, sir, and it's a privilege to hear those words from you. And I mean, there have been a lot of ideas which I have borrowed from a number of principles which sir has adapted. So there is always a mutual learning involved, and I have personally started learning GST from the book of sir, which I think got published in 2012 and 14 with regard to international judgments, which was released in August 12, if I remember correctly. And now the GST and indirect taxes demystified. So those, how we can directly borrow the judicial principles into the into our daily practice is what is going to be extremely relevant for all of us. And today was just a trailer of what we can understand. I mean, in this short time frame, it's very difficult to understand how do we start. This is only a start for us to read the law. In this short time frame, it gives us an idea how do we borrow small principles relating to the definition of business and all of that. So let me now straight away dive into the question answers for everyone. So please feel free to raise as many questions as possible. And please do feel free to raise any questions right now. Anyone, please, in the audience? Yeah, please.
Hello. Sir, you were just referring that corporate guarantee by holding company to subsidiary. So, which case you were referring that?
I had argued set of cases in Karnataka High Court, and it's still in interim stage only.
Okay.
So I had got a stay on the enquiry itself.
Okay.
Even the show cause notice has now not been issued because I had got a stay at the enquiry stage, saying that these kind of transactions you cannot even inquire into, that kind. So ultimately they may issue a show cause notice at some point of time, but as I argued it quite some time back, I don't remember when, but must have been 2 years or 3 years back, I think, maybe.
No, this one circular has came from October 23.
Yes. Post that only I think I argued it.
Okay.
If I'm not mistaken, then it must be less than 2 years.
No, the status remains the same or any change?
I had challenged, which one, sir?
Post this circular.
Post even the amendments and circulars.
Yeah, amendments.
We had challenged the 28A on Article 14 challenge and other challenges on the ground that you cannot single out this transaction. You see directors giving, you say you have one 28-1. Now in companies giving, you say this. And then you say that the valuation will be, earlier it was, you have not even taken the risk factor into your calculation. You simply put one flat value, so and so per year, so and so. In fact, that per year came later, if I remember correctly. These kind of valuation mechanisms where you don't factor in other things. A guarantee given for 10 years is different from a guarantee given for 2 years. And these kind of things we are challenged in that petition, part of that petition. This is prior to and post 2023, October, no?
October 20.
Yes, both.
All right. Any more questions? Yeah, Aditya. Yeah, sir, we'll come to you next.
So from the perspective of valuation, what are the challenges you are foreseeing in barter or the exchange type of transaction from the experience of your erstwhile
Yeah,
designers?
see, barter transaction only I was mentioning this notional value. One of the matters which have come up to me is that they want to, it's a very funny thing. They're imputing a value in the, and saying there is a barter. First they say there's a barter. Then they say we'll impute a value. And bring the transaction to tax. So that is why I mentioned the notional values, can you bring it to tax? Once you say it's barter, then can you bring a notional value to tax? Forget, for one moment we may question whether there's barter or not, just forget it. Assume there's a barter, can you bring a notional value to tax? So there is some, you are going to find a lot of action in this, where they will say, see, it's quite possible that in business you enter into an agreement, you don't enforce that agreement. Mutually you decide not to enforce the agreement. But the department will go by the agreement and say you should have done this. So these kind of matters are now starting to go across states. So you will find a lot of action in barter trade and fixation of notional values on that trade. And if you can't get an open market value, for which I am not going to give them any help, it will be difficult for them to tax.
Yes, next question, please.
In case of during the audit of last 4 or 5 years, department is issuing SCL that under section 47(1), the GST 1 is late filed, but they are charging this penalty for late filing during the last 4 or 5 years. So in some audit, they are not issuing any SCN regarding this late filing of GST 1, but some officers are charging. So whether it is mandatory or it is money, yeah, their officers.
Always in a principle, though this is not my topic, you can address it to another person, but I'll still tell you.
Yeah. So we'll, if requested, I mean, there are a number of sessions lined up for today. So let us restrict ourselves to topic relating to supply and valuation if possible.
I'll still tell you, this is what it is. In defending one client, don't expose another client. If he has not got a notice, be happy. The rest of the query will be answered with other speakers.
Yes, any further questions? I think that's all. Yeah, just one last question we'll take up.
Sir, after the judgment of Calcutta Club and with the insertion of 71AA, can it be taxed today's scenario still now under GST?
Once it has been held to be unconstitutional by one court in the country, it is unconstitutional throughout the country. Please see the decision of the Supreme Court in Kusumingat's case.
But sir,
It is unconstitutional for all purposes.
But sir, what about the explanation that has been inserted?
That means I am to blame. Whatever I said earlier does not seem to have gone into the system. I had said that you can't do anything to any amendment to the section is of no use if you don't do constitutional amendments. So what the Kerala High Court says is, you do constitutional amendments, then this section will be valid. Explanation, whatever it is, everything will be valid if constitution is amended.
Thank you, sir.
All right. So, so we now understand perhaps the constitution is perhaps the mother of all statutes. So before we start with understanding the statute, we have to start with understanding what is the power which is given to the GST law as per the constitution. This is one of the biggest takeaways that we need to understand from our discussion today, and we should start reading. Before reading the GST law, we should start reading that as well. So now I would like to invite CA Renu Modi to please give a formal vote of thanks to sir. Thank you.
I think if GST ever had a heart that beat, it would beat somewhere around between supply and valuation. And today's session has given us a stethoscope to let us hear it very clearly. So on behalf of ACAE, CA, CPE, Study Circle of EIRC and of ICAI, I extend heartfelt gratitude to Senior Advocate CA V. Raghuraman sir for his thought-provoking deliberations on the topic. Sir, the way you have delivered with practical real-life examples and the fun way that you have carried it through has made the session not only informative but also engaging. I think we are just not walking out with the right answers. We are walking out with the right questions to ask, like taxing of barter system. Can we actually tax the notional value? So we are walking out with the right questions, which I think is the true mark of an evolving professional. I also express sincere thanks to CS Shubham Khaitan for moderating the session and facilitating a meaningful dialogue through Q&A. And I express my sincere, heartfelt appreciation to the heroes behind the scenes, the organizing team who has made all efforts to ensure that everything goes on smoother than a well-reconciled GSTR 3B. So with this, we wrap up this session and we look forward to another technical session too. So thank you all for being here and looking forward to the future sessions. Thank you.